In trading they say that the simplest strategies are the best, and to a certain extent this is indeed true, especially for beginners. That's why in this video I'm going to talk with you about two simple strategies that can be implemented with using a simple pin bar candlestick. Let's not wait a second, let's go. First, let's talk about the pin bar candlestick. Most of the traders on YouTube, including me, have shown you hundreds of candlestick formations that you can use in trading. The problem is it's quite a job to remember all of them, and even more difficult to identify them in real time. So in this strategy we will be using only one candlestick formation, that's the pin bar candle. This is how the pin bar candle looks. We can see that the pin bar candle closely resembles a hammer, and that's why it's also known as a hammer candle. Now pin bars are strong reversal indicators. Therefore, if we can successfully identify a pin bar candle, we could catch a trend reversal. So why does the pin bar candle work? Let us understand the logic behind it. So this blue candle is a bullish pin bar, and let's say that the price was in a downtrend before this candle. Then on this candle we see that the price opened here, then the price went down and created a low at this point. When the price was at this low, there was a sudden change in momentum. The buyers saw this low price as an opportunity, so they started buying the stock in huge quantities. This leads the price to substantially rise and close above its open, and we can also see that the candle closed near its highs. If we dive even deep, we can say that the sellers were able to push the price from the open to the low, but the buyers were so strong that they not only covered the ground until the open, but they crossed beyond the open and closed the candle around the highs. So we can clearly see that the buyers covered more distance than the sellers. Therefore, the buyers overtake the sellers, and we can expect the price to make an up move. The same logic applies to the bearish pin bar. Let us assume that the price made an up move before this pin bar. Then this candle opened at this price. Due to the previous bullish pressure, the price goes up and creates this high. At this point there was no signs to the sellers. When the price was at this high, the sellers saw this an opportunity to sell. For some reason or the other, they started shorting the market. The sellers were so powerful that they not only reached the open, but they exceeded and closed the candle near these lows. So they overtook the buyers and displayed their intentions with the pin bar candle. Therefore, we can expect the price to make a down move here. Now we need to understand one thing here. Every pin bar candle does not lead to a reversal. For instance, here we see that the price was in a strong uptrend. In this uptrend we see a lot of bearish pin bars. If we sold at each of these candles, we would have made huge losses. Hence, we need to take the background information into context and then look for an opportunity. In other words, we cannot trade solely based on the formation of a pin bar. We need to look for confluence and confirmation. So here are strategies that can be used for the pin bar candle. Strategy number 1. Use support and resistance with the pin bar candles. This is a pretty simple strategy, and the title speaks for itself. We look for strong areas of support and resistance, and we will wait for the formation of pin bars at these levels. So here's a simple example. Here we see that the price was in an uptrend. The stock faced resistance twice at this price, so we mark this level as a resistance. Then the price broke out of the resistance level and rallied. So now this level has turned from resistance to support. Later on we see that the price made a pullback right at the support level. At the support level we see two pin bar candles that form in quick succession. This is a strong indication that the price may resume the upwards trend, so we buy here. We can keep our stop loss a few pips below the support level, and we can place our targets around the previous high. We easily achieved our targets on this trade. The reason for our success on this trade is that we look the trend and support level into context and waited for the pin bar candle to trigger our entry. Let's look at a sell trade. Here we see that the price faced resistance at this level 2 times. So we could confirm that the resistance level was strong. Therefore, when the price came near the resistance level for the 3rd time, we expect the price to find resistance. And that's exactly what happens. We see that the price forms a pin bar candle right at the resistance level. So we sell here. We keep our stop loss a few ticks above and the resistance level, and we place our targets near the recent low. As you can see, there was a dramatic fall after our entry, so we made profits on this trade as well. Strategy number 2. Use trend lines with pin bar candles. Trend lines can be simply so of non-horizontal levels of support and resistance. Just like support and resistance, trend lines are also an integral part of technical analysis. Trend lines are used to identify the direction of the trend and helps us in identifying areas of support and resistance. We will use these trend lines as confluence with pin bar candles to identify trade opportunities. So let's look at an example. Here we can see that the price found support twice on these levels, so we stretched a trend line across by connecting these levels. Later, when the price came near the trend line, we expect the price to find support. We are now looking for a pin bar candle to form near the trend line. Here, we have a beautiful pin bar candle from right at the trend line. So we have a confluence of pin bar and trend lines. So we buy here. We will keep our stop loss below the trend line and we can keep our targets at the previous highs, as you can see. So the price gave a strong move after our entry. Let us now look at the sell trade. Here we see that the price found resistance twice, so we stretch a trend line to mark these swing points. Now, when the price returns to the trend line for the third time, we expect the price to find resistance at this level. So we look for selling opportunities. Here we see that the price forms a bearish pin bar right at the trend line. This is a strong sell signal. So we sell here and we keep our stop loss above the trend line and we place our targets at the near term lows. As you can see, the price gave a strong down move after our entry. So here I've given you 2 simple strategies that you can implement in your trading and reap rewards. The pin bar candle is a powerful candlestick pattern. You can use it with confluence with other indicators, create your own strategies. If you like this video, then be sure to press the like button and subscribe to our channel so that you don't miss any new videos. See you soon.